Good afternoon, all. This is Fadi Hamzi. I had a bad day in the market. Started really good, but I got into trouble. So if I'm not perfect or I'm not good enough, my apologies up front. Okay. I had a coffee that spilled using a wrong Starbucks cup. Should not bring it to trading desk area. And right about that time, I also lost the machine that we're on now. My main front end. I trade very little on this. But I was trading a number of accounts, and of course, I had to use this because of the CPU issue. The problem is all my code's in there. So as I had copies, obviously, I had copies backup every day. I had copies of it on thumb drive. I put it on the machine because the Windows 11 was officially introduced last night as on my laptop. So I have copies, but it unnerved me, and the market got crazy right after the Fed chair finished in terms of I guess the some of the internal trading during the FOMC during the period where the press conference was on turned out to be a bull trap, and they pushed it down. So I'm going to take I'm going to be going slow and methodical slowly, and then slowly come back. It's just usually you cannot just sit there and say, "Oh, I'm going to go get it tomorrow." Back from them. No, it doesn't work like that. So if I'm not my normal, I apologize. Okay. Have no housekeeping stuff to tell you other than we've had some progress in our system, but I've got like 2 modules now that I've got to work at, and I haven't. I haven't gotten there yet. Hours have been long, and I need some clarity. And so, but we're making headway. But so no comments on the system side yet. Probably until about a week or two. One of them is big. One of them probably will take us. This is a pre-market trade. This is the non-farm. This is a pre-open, I should say. GDP. Let's see. Non-farm GDP, CPI, PPI, retail sales, home sales, Philly Fed, and jobless claim. We covered trading those in the morning. Problem is, it's gonna take a little bit of time. Yeah, it's a different module, and the different rules apply. So by the time we're done there, it's gonna be at least a month or so. I can't expect that to be sooner. Let me turn this off. And so that's one. Two, the other module is it has to do with the when you have news day, like 10 o'clock. We have post the start. If you start, let's say consumer sentiment usually is at 10 o'clock, so that's a different animal. So so we should be good, but that's a little bit sooner to do. So no updates, and then we'll do now. Also, we changed our way of doing this home. Oh yeah, I should talk about this. The open house concept we had, where people just click and jump in, was no good because all they do was get to that chat room. They didn't get to anything. We have to show them to go to the open page, download this on that. We said no. We're going to go back the way we used to do it, which is get access, go in there, log in as a comp. We'll give you a comp account. You can come in and see what the customers see. Everything would be saying, you can go through all this stuff. Land, go through your product. If you only have one, it goes there anyway. But go see the webinars, read the user guide, print it out, see the chart, see everything we offer, rather than just a little snippet and then a lot of hand holding. And this way you're in the same chat room. We don't have to change this. There was a mistake there. It's just too much going on. So we reverted back and we're running one. And I think we're slightly also overwhelmed. There's a number of people showed up, which is good, but also it involves hand holding. Our issue is always tech support. Because a number of you just need people to get back to you in time. We do that. Our rule is to be same day, but sometimes it takes a little bit longer, or not as robust as I expect it to be or want to be. Okay. With that said, let's move on to. This is the end of housekeeping and stuff. Econ calendar. Okay. As you know, we had the press conference here. Let's see what home sales came in. The only data point we had was home sales. Let me go there today. Came a little bit expected. I remember I talked about it. Yeah, because I took early morning off. It's Wednesday. System wasn't trade or prop day trade. This number came out. Actually, this came at 8:30. No, it came at 10. I went with Tico. We had to pick up something for his food stuff, and we came back, and then yeah, I went over that. Came a little bit better. I remember that. Yeah, and against consensus. Remember this number. Where's my mouse? There we go. Hold on. This number is the revision for that. This is the consensus, and we came better slightly. So positive sign there, a little bit. I think the mortgage apps also was it this morning. Yeah, let's take a look at this. Yeah. I remember yeah the spike there on the chart. What that time morning? Yes. Yeah. Mortgage app came in. Yeah, better than expected. Oh, I'm sorry. We don't have expectation. We just better than prior. Yeah. Look at it. Yeah. So. Are we at peak inflation? I don't know. I'm not an economist, but the work that again, if you read Jeff DeGraff is on. I posted on Twitter. Hold on, let me show you that too. You might want to look at that. This was was it this yesterday? Where did I put this? Oh, there we go. Here we go. Admiral Tico put it up. Okay, this one. Yeah, I know I RT'd that, didn't I? Oh. Let me just, he says his belief is what time was that? 23 hours ago? 4 hours? No. Oh, there we go. It's on Twitter. Right there. Okay. I would go and listen to that. Okay. This was an interview done on CNBC, I think. But what's important is what he said. As you know, it's an advisor Soros fund. Very smart guy who used to work with Steve Schwab. So his take on the PPI was that we're near the peak inflation. I mean, peak, yeah. Because it starts in PPI anyway. CPI is the headline, and that's you and I would feel. But smart money looks at what the producers are paying for, and he feels that that's shifting. So, which slows down their passing the inflation in their cost into clients. That means the customers, and the customers will have a lower CPI stuff. So as we go forward. So, but the process is not a switch. You're not going to throw it. So I have that, if you will. Jobless claims tomorrow. I don't know about current accounts. There's nothing else tomorrow. That's important. Oh, these are black linked, fed in the afternoon. I don't know. Look at nat gas. Now, September 23rd, on Friday, we have a composite flash. Okay. Yeah. 44 versus 47. You have a range there. Yeah. This is has a lot to do with services industry. So yeah, just read it. You'll see what they're up to. We got to be over 50 or not. So watch for that. Don't have this service doesn't give you next week. I think Market Watch does. But what's going on? But we're on the third week, so let's go on the calendar. And next week you're gonna have GDP. You're gonna have LEI, the economic indicator. By the way, Gundlach was talking about the bond king, the head of Double Line. He was talking about hey, you got to look at that, and he thinks that's going to go negative. Now, seasonality, we have Jewish high holidays. We congratulate all of our friends from the Jewish faith. Remember, Sunday would be New Year's. That's Rosh Hashanah. Historically, if you read Bill Erlanger or anybody else, but he's an expert on my book, Chapter 8. He did about seasonality. You would see a big seasonality that rains all the time. It has a little bit of volume. It's coming up between Rosh Hashanah to Yom Kippur. Rosh Hashanah is about 10 days. Rosh Hashanah is on Sunday, 25th. For this year, it shifts. This and then Yom Kippur is on the 4th, which is the next the 2 weeks from yesterday. So you want the Wall Street saying goes, you sell on Rosh Hashanah, you buy on Yom Kippur. What's the reason? Because they're not going to be at their desk. They're taking time off and to to get to their religious services. So volume drops, and because of volatility is high in September, you won't get the support. When you come back, when they come back, volume picks up, and usually you're going to see the bargains. I remember clearly in '98, exactly happened like this, and it was. And remember, the problem came in '98. Now I'm not saying that's analog, but problem came in because this is Yeltsin. Yeah, Yeltsin was in power. I think Putin had just become his deputy or maybe head of FSB, and then the bonds crashed. They could not mark to market. It was a long-term capital, and it was on the 30th of August, which was a Monday. That started the swarm, if you will, the press, the push down underneath the prices, and then it really intensified on Rosh Hashanah, and then we cleared. I think day after Yom Kippur, October 8th, that was, I remember. And people had to get long, as Walter Dimmer says. They had to get long when you don't want to. My point is. By the way, that's a suggestion, guys. Go to Twitter. Go to Walter Deemer. There we go. Oh, there we go. Walter Deemer. Okay. He go to his website. You may want to read this book. When the time comes to buy, you won't want to. But that's how things get bad. So you sell it when they all want it, and you want to stay in. You buy it when nobody wants to get in. This is a good book to read, and you can get it on Kindle. So okay. I have no relationship with him. He doesn't even follow me. I just like his commentary. So, yeah, and he's very, very focused. Very, very focused on what he's doing. Okay. Having said that, let's go to charts. Okay. All right. Now remember, I haven't studied these. I haven't even in the last hour I couldn't even see these charts. Yes, I could bring up on other machines, but other machines are dedicated. They were doing different things, and I was in the middle of several accounts in a fast way, and that's part of the problem there. Okay, that's backing up. Not yet. Okay, sorry. Are we good here? I'm backing up. 1 second, guys. Yeah. Yeah, I gotta make sure we're backing up. I learned my lesson today. Of course, I backed up here. This one gets backed up more than anything else. But it was a close call. All right. As you know, we're flat. We went flat at this bar. Okay. You saw what happened the following day. Huge drop. No, I did not reverse down. I don't do that. I'm not that smart. I've done it a few times, and most of the times I've been wrong. A few times I've been right. I call that luck, not finesse or IQ or know-how. It's a gamble. So I stayed aside and I said I'm going to sit through at least a week. Well, you've seen what kind of week we've had since then. And now we get the full sigma level move. Outside bar, this is not good. Let me see. Let's make sure our data is clean, now that it's settled. Today was a chaotic day, volume-wise. So, yeah, so we have a negative 235 McAllen oscillator. What does it mean? Below 250 or somewhere about here. I mean, listen, we're not going to turn around and go back up immediately. Remember, bonds could do that, but in terms of coming to this recession issue, markets don't. Markets have a little bit of delay. I don't mean from a low, but I'm talking about further down, that sort of thing. So the ultimate low is not immediate. So, but typically these set up a rally. And remember, if the rally comes, it'll rip your face. Bonds go gradually, better prices. The stocks go fast. Gunlock actually discussed that only about, I don't know, 40 minutes ago, I got a little snippet of it in the background while I was trying to bring this machine up. Volume was 6.37, down to up rate, down to up volume ratio. That's my own indicator. It was simple. You just take one volume against the other. I think Larry's was more comprehensive. I will get to that. Flatline on a daily for CI, and you can see what's happening with the breadth thrust. It's waning. It's losing its stature that it had. So not good. So like trend following systems, tonight they're gonna go short. Why? It's a break, channel break. It's a channel break there. So they're gonna go short until it doesn't pay to go short. But right now, I think the momentum has changed. We'll see how it opens up at 6 p.m. on Globex, but usually that could be a head fake too. So listen, we'll get an intraday chart here. It was a head fake in the intraday. Imagine what happens overnight. All right, Canaries. I don't like this at all. It's almost island. I mean, unless this thing rallies up quick, this could be because of the potential for a rail strike. That temporarily, they say, I haven't seen anything in writing, they say that they have a deal. But just like a little gap down we had there, we have a huge one on transportation. I just, by the way, noticed this. Last couple of days, I've not seen this chart. Again, too much going on, too much to do. And you can't do everything. You make progress in one and you lose somewhere else on some issue. But this is, to me, ominous. I don't like this at all. So had I known this is earlier, I probably got short earlier. I haven't gone short. I'm flat. I would have gone short a little bit before this, maybe like a day ago or a second day ago, but not a good situation. So that's transportation. SPX, as I pound the table to remind you, SPX will not go up unless transportation does. Russell, same story, except you don't have the gap down, and this is the key for not utility, no, for NDX. This is utilities. That's because this is basically a bond. If you think about it, especially electric utilities, it acts like a bond. You can see what's happening with the rates. It's causing that. Yeah. My sister is not happy. Okay, but that's a separate issue. Not because of what she owns in cash. No, she can probably at the margin get better CD rate. But one of my cousins is here. Yes. Yes, bravo. Yes. But also, thank you, Army. You're absolutely right. No, but she owns a lot of notes and bonds. If she holds it to maturity, it doesn't happen. If she tries to sell it, she just got a huge discount there. What the heck? Now, Anita just telling me, don't forget FedEx. Yeah, this is FedEx. Yeah, FedEx caused that. I don't know what date that was, but this is that must be it. Must have been on the 15th, which was last Thursday. So this happened on the 14th. So last Wednesday, week before, this caused the problem. Of course, on the 15th, we dropped, right? Let me go back here. Let me get my calendar right in my head. Yes. That's a 14. No, that's a 12. Oh. I see. So FedEx gave the bad news on the 14th. Okay, yeah. I think part of FedEx is also Amazon, losing Amazon account. Yeah, that wasn't good for them. But they should have known that's coming. This is not Amazon is not a joke, and so hopefully they can rebuild their business. I was over there yesterday because there was a problem with my items, and at 5 o'clock or 4, no, it was 5 o'clock, 5:10. I've never seen that FedEx that empty. Okay, so maybe they're getting double whammy, both losing Amazon and Joe Economy. Remember, Amazon was not something new, just lingering and moving on. I don't think it happened this week either. It's just been they must see what's happening there. There are contracts. So thank you for bringing that up, Ani. You're absolutely right. Okay, this was the FedEx, so we're good. Okay, the trender. Well, before we talked about how many of them are positive, how many are negative, they count as an indicator. Needless to say, it's just getting worse. We're getting further away from these. So are we getting to a rubber band area? No, I don't think so. Short term, maybe, but I don't think so. But I mean, this is really key. We're not. So I'll open it up and show it to you like this. So we're not getting to any rubber band area. We get to this area, but of course that was a percentage. This is negative 22. Where it's 11. I believe it was what 15. I remember when I was in Chicago, we talked about it on a 50-day. Well, statistically, historically, statistically, so shall we say. So we're not there yet, but I think bleeding will continue. We could be getting into a press down into what do you call it? Into pre-sale ahead of Yom Kippur. I mean, not Yom Kippur, Rosh Hashanah, which is Sunday. So because we have 2 more days left today, tomorrow, Thursday and Friday. So this could start that, and then we have a good wash. What you don't want to do if the market goes up here, and then there's going to be a really, really a big trap into that seasonality. But who knows? You never know. You never know with this market. There's a lot of inputs. There's a lot of manipulation, both from the Fed and the White House, Treasury, Labor Department. They say things, and that may not be all valid per se or long term, but they could any given snippet. But they can. But the big boys like Fed guys take that one and use that as an excuse to sell the hell out of it. So the walls are increasing. That's not new. Let's go to walls here for a second before I get to SB1. There we go, Nancy. Yeah. Good call. Walls are increasing. Look at the center line. That call option is going to be good. And we just rolled. Last week, we rolled it into October's. So we're good. We had September's where we're getting close. I don't like to roll quick. So we rolled it actually week before last with it. Not this Friday, last Friday. We rolled it to October's. This is wrong. It can't be this. This is bad data. I gotta write to them. They'll fix it. There's no way to trade like that. So. Listen, if it was down here, hold on. Let me do this. Hold on, Murray. Time frame. Let's go to 5 minutes. Yeah, this is bad data. Yeah, that's bad data. They'll fix it. They'll fix it overnight. Yeah. If it was that, what do you call it? It was real. It was the correct data. It should be continuous, and we should see several bars. So no. All right. Let's go back to daily. I bet I need to do this, otherwise I forget. I go into a chart quickly, and there's nothing would have changed. So. Okay, let's go back to SB1W. Okay, we had a buy. Versus trend follow. It bought it, and of course, got stopped out once to a sell. So and then we have a buy on the weekly. Weekly is going to be a little bit slower and maybe take a little bit longer drawdown before it rotates. But that's where again, this is a timing model. We do not trade off of this. We use it as like a super indicator. But it's one of our inputs. Long on a weekly, short on a daily. I think if we get past October 4th, you're going to get where these two will line up. If we get the wash we need. What does wash mean? Volume. Yeah. These get floored. Momo goes like negative 12. We get to negative 3 sigma on the SB1. This number pops over like 140 area. This is the new lows, weekly lows by S&P, and these go to 0. Right now we're already almost there. We came up a little bit and they gave it back. Okay, that was another tell when it went, a little bit high and then died. Boom. So which put us right in this area where that gap is. No magic. SQ. I don't think these guys are ready. These boys. Remember, this is the risk, the tail risk for all of the money put options of SPX, yeah, I don't see it there. I don't see it there. So this is too low. We're getting almost all-time low. This is all-time low since the data was created, which is I think 2009 period. So where this you got to remember, this is not tradable. This is just a measure, and it happens about an hour after the close. Let's see if we have today's. I'll be interested to know what today is. Yeah, I think it looks like today's data is in. Yeah, 116. The lowest one, the all-time low is 112 almost. Okay, a little below 111. So we're down there. That means that maybe we're getting close to a bottom like they were expecting, but doesn't mean they're right. The big guys. You saw in 2008. When Morgan Stanley and Goldman Sachs doesn't know what they're doing, that tells you. I'm not talking about B of A. I'm not talking about Citi. Those are not investment banks. They're under Glass-Steagall Act removal, which Clinton did. They got in that business, but they don't understand what they're doing. So, but look at Morgan Stanley and Goldman, the two stalwart investment houses in Wall Street. But they get into trouble. That tells you, they don't know what they're doing. True. So, I mean, again, I've struggled with this. What I'm trying to do with this is usually see if we have a big drop. Now, here's the problem: is another more drop warranted? There's a lag involved. Okay, I'm not going to go in there and say this is the signal. This is 6 months almost now. Yeah, not 6 months now. That's April 4th. Yeah, that's not a signal. No, if anything, that would have been a low signal for the June lows. We've had no fresh signal here. So it could be, this could be secular. Yeah. Which is scary. If it's secular. Because if cyclical is one thing, but if secular, that means we could be going a lot lower. Yeah. Listen, 80% of debt of this country was found in the last 20 years. I mean, Osama bin Laden spent $500,000 on training those pilots, and look at what damage we took. It's 80% of our debt is from that. That's 24 billion almost. Yeah. But pilots were not on the books. But off the books, you bring it back to the books where the problem becomes big, and then it gets magnified as rates go up. So having said that, let's go to treasuries. Yeah, I think 5-year hasn't been here. Somebody said like since 2004. I'll believe it. Yeah, it's huge. Of course, yeah, look at it. Look at it. So what the inversion we have. Yeah, yeah. So these two are pretty much the same. So why would you want to take 10? 30? Why do you want to park your money at 30 year? You're gonna do at 10. But I remember there's a YTM for treasuries. Okay, so the corporate bonds are gonna be above this. Nobody's got the credit facility. I mean, credit rating of U.S. treasuries anyway. Both your principal and dividends or interest are guaranteed by full faith of the U.S. government. That would hold until nobody's willing to fund this one. We're not there yet, so I hope we'll never, in my lifetime, I won't see that because this stuff it will be kids stuff for borrowing rate, and then there'll be a real collapse because you have so much debt now. Yeah, so they have every incentive they can to keep these rates low because now the interest expense on the U.S. income statement, if you think of it as a country, as a company, whatever. I'm sorry, as a country income statement, like a country, I mean, like a company, the interest rates are ballooning right now because that's the best rate they can borrow. For what? For the refinancing. We're not paying the debt. We're not even paying the interest on it. We're even borrowing for the interest. Okay, so yeah. So much, yeah. Now, don't get me started on this. Yeah. Okay, now, oh, hold on. No, there's a problem here. Why is it 916? Jack, one second. No, that chart is not right. Hold on. No, 921. So what do we do? Oh, Murray, because of this is different. Yeah. See what happened? Yeah. Murray, I forgot we wrote. Okay. Okay, now this is correct. The spread was correct, but couldn't plot it because the primary data, the first one, was where I had to stop trading. Yeah, this is where we are. Now it's the right chart. Okay, so I may have put this chart up wrong. Well, no, we stopped trading last Friday, right? So I don't know if we did or not. If we did, that chart is probably off. The spread was correct. The spread is the next 90-day play. So it's that's gonna be Z. This is U, which is SIBO expired yesterday. So this is wrong too. My bad. Yeah. I'm behind. I'm trying to do too much. I understand. That's not an excuse, by the way. It won't hold. That's the reality. So this is a V, and this is gonna be F23. This is a January contract. Yeah. VXF23 next year. Yeah. To keep the 90 days in play. Okay, boom. So we'll take you out. You expired, I believe. It settled this morning. Yeah. And we should have wrote Friday. We wrote on Friday. So before whenever is the VIX rollout, we roll over. And then we're gonna add here VXF23, which is January. That's where we are. Now volume is not there because it settled at 5. Once we reopen at 6, which is 24 minutes from now, then you see volume and you see not just you is going, lead is V. Okay. Now we're talking. Okay. Now it makes sense. Okay, here we go. So let me copy. Because I look at that chart, I said, no. Something is off. And I have nothing to hide from you. I'd rather tell you when I make a mistake. Okay, yeah, the chart for Z is correct. Looks correct. That's what they did in the last hour. Yeah, pretty much from the time I got into trouble with the machine, it just went. And look what happened with the spread. The spread went to -30. At 0, you're at the bottom. So could we have a bounce tomorrow? It's possible. Could be a dead cat bounce? Sure. Absolutely if we go up. Because there's no conclusion on the data on the inflation front. That's going to take time. That means we're going to bleed. So I don't want to jump in there and go along here with time digest. What I'd rather do, if there's a rally, and then I short that into the seasonality of sell Rosh Hashanah, buy Yom Kippur, which has worked for years and years and years. I don't think it's 100%. Nothing is 100%, but it should be way above 50. Could be around 75 to 80%. So that's what I would look for. That's why we have, of course, we had some cues up. That was the only trade we did, but not for the PMT folks. We've been flat for PMT. Results have been posted. Results have not changed. And I'm not the type to do reversals. I don't do it in my trading either. Go through. Hold on. Where's my performance here? There you go. Yeah. This is what we have done. This is the last time. And we went flat at 41.10 on September 12th. Okay. This was taken that evening, I think, whatever. So that's what we have done. Yeah. And by the way, this is a little bit higher. You see a cutoff, it's like 205, whatever. Hold on. Let me just show it to you on the Excel. Rather than have trading up like this, I'll show the Excel itself. I'll tell you what number it is because I want to look it up. I just don't know. Okay, here we go. Here's the. Come on. Here's the. No, oh, I need to shrink. Okay, sorry. Here's the Excel that keeps track of that. Okay. But that's the chart there. So hold on, let me put a chart up like this for you. This is the true chart, complete chart. It's a slightly above it by adding, I added on 10% above. We're at the all-time high for the performance. Obviously now we've gone flat, so we don't touch this. We can't. This is by per. This is a key you have to understand. This is per rules that they're given to us by Time Digest. We're only pegged or have a anchor from our lows to highs or vice versa. When this is as a position, when the PMT has a position. So when we go flat, the SPX also stops, and this is how we affect that. Notice when we have flat, hold on. Oh, sorry. Okay, let me bring it down. Sorry. This is about here's the data. Okay, it's about 224. Okay, so if you go to 226, this is from June. I mean, no, February. That's as of last trade. We have taken 890 S&P points in that sequence since February 2nd. All big winners. Well, one of them wasn't. Yeah, but they were good. This was a good one, but they were big winners. It's 3 digits in S&P. That means 9,000 points on the Dow. Okay, we have had 166 trades over 204 trading days. So our average signal is about 12 trading days. Now we're flat here. This should be flat. I'm sorry. It's flat. We have stops. So notice where we go flat. There's a blank. Why? It's a reindex value. We're not switching back and forth. When you switch back and forth, same value is used for S&P. You go this way or that way. We can't. We have to go and peg from our call to where the next move is. Okay. That's why I want to emphasize to you. Somebody tried to fit S&P into this, and he said your chart is a mistake and maybe you're a fraud. Okay. So I had a little fun with the guy. Why not? So I asked him, where'd you go to school? What did you work on? He built a few houses remodeling in North Carolina. I suggested to him we should go back doing that. Okay. Don't argue with me and stuff. This is way above your pay grade. Okay. At 16, I was a sophomore at Princeton. I worked on B-2 bomber, and he just didn't say anything more. I said, listen, we cannot take credit or take away from or have a disaster on that when we're flat. This is tied into the SPX. So it's not a true SPX chart. It's the movement is correct when we're in a position. That's how those points mean. You're not, because we're not always in. As a trader, you're not always in either. There are times you step out. You got to stop the clock. You got to measure yourself about how much you beat the index. That's what I learned from who? Burton Malkiel, the guy on Vanguard, the originators of indexing, that said you have to see how much you beat the S&P. So go back to the numbers: 98.5% over since middle of November of 14. That's over 7 years, almost 8 years. Here's what I would suggest you do: go to Morningstar and see how many people have beat the market. Not compounding, just straight line. And remember, not options, just cash. Hold on, where's my calculator? Take that 98 number, okay? Divide by 7. Or divide by 8. Divide by 8. 12.5%, 12.2%. Take this number, which comes from these two time series. Not what the market did, but how much, what time I was in. It's 98.67. What do you put? I guess it's close enough. 98.467. Okay, fine. Put that in. So for now, it's going to be saved. Leave it there. 6.7 over 8-year period. Okay, comes about 12. 98.67 divided by 8 comes about 12.33. Go in there and see anybody on Morningstar, which all the big guns are, have beat it by 12.33% each year, repeatedly. If you can find that, I'll change my name. Okay? And you know how much I believe in my heritage. So He doesn't drink tap water. Yeah. As a matter of fact, I don't know he's all that crazy about Evian. His favorite water is Voss from, I think it's Norway. Yeah. Admiral likes Voss. Yeah. So, no, yeah. Yeah, he doesn't do Evian. It's too French for him. But seriously, it's Evian. I mean, it's always something. It's Voss. Where's it from? Hold on, I'm looking at the bottle. Voss. Norway. It's from Norway. Yeah, Norway. So, yeah. So, but no, yeah. I don't think he's ever. I'm not sure he's ever had. He has ever had Evian. I don't mind Evian, but I'm not crazy about it. There's nothing like Voss, so especially in glass. I don't like plastic. It's not good for you. So, but um, but I understand your question. So let me address your question. Oh shoot! Hold on. Did I close this? 1 second. Hold on. Let me finish one thing. Let me just make sure I didn't mess it up. Huh? 967. Okay, yeah. I'll take a pic later on. Yeah, now that we have a correct value there. Sorry. So let me finish first, though. Gary's asking about the S&P level. We'll go. First of all, this is the hourly. We took the hourly chart. Took the 2 sigma completely out. I mean, this usually doesn't happen. That's where you usually get support. So I suspect we're going to have a problem next couple of days. Unless we see something after 6, but we can't see it now. It's 5:34. I doubt it. And with that seasonality coming, I doubt anybody wants to get long here. If we get, but because people don't want to do something, doesn't mean it won't happen. There's always a surprise. If it does get long, and we rally, let's say tomorrow, as just a dead cat bounce, then most likely tomorrow night I'll go short, and then we'll put a trade on for the duration of the Jewish high holidays between next like 10, 11 days, or would be about 9 trading days. Yeah. But we never got to negative 85. Intraday we could have, I don't know, but I think we've been impossible almost because look where we closed because at the end of the session. So. My target today was I posted it. This is in the chat room. What was my target? 6, I think it was 6 something, maybe, but that was early in the day. Yeah. It was not the closing value. There was a good possibility, I forget, it's in the chat room. That was like lunchtime, I said. There was good possibility that he would reverse midday. And part of the day is reversed. Yeah, part of this part area. Of course, this was the big boys coming and just obliterating everything. Good question. Let me get there too. Hold on. Let me get to it. So let's go to the bigger one. So this, we did never get to negative 90 here, okay? But, of course, I would watch Norseman. Norseman thinks we're going down their boat. As you know, he was in our chat room. His family have a big painting operation for high-end homes, and they're doing a 50,000 square foot price. So he's trading from the GC, the general contractor, truck or bus or whatever that moved the office. There's office. It's a portable office. That they put on the property. Yeah, it's straight from there. That's why we want to see what the price is from his house. He's not at his house. He's got to go on top of the truck and take a look. Sometimes he says he's using the bucket truck. We understand. Anyhow, long story short. Short here, short there, short here. Remember last time this wasn't working? That was error on my part. It is. It's the same code. If we change the code, how are we going to change? All shorts are still shorts. Now, don't have anything else there. Let me look at one more chart, then we come to questions. Again, I'm not myself right now. I apologize, but here's what you got. I mean, worse would have been postponed this, and I wanted to be able to get here. Okay. This data, is this updated? Yes, this is updated. Yeah, that's for sure. Control R. When in doubt, always refresh. Yeah. And to get a perspective, hold on. for seniors. Thank you. 5 update. Okay, hold on. Trade station. Yeah, unclick. Okay, thank you. Okay, 5 years here. All right. Big one was, of course, this one, 2018. Yeah, Christmas. This came from a SKU in August. This one also came from January SKU. No, December SKU. This high was February 2nd, or no, February 2nd week. I believe 12 to 15, something like that. Right around what do you call it? Right around Valentine's Day. That's the one that Admiral Tico shorted. That was his classic move, and I was scared to death. This drop was 38%, 5 weeks. I don't think we've ever done that. You can see the slope. It was incredible. We had a couple of days that were up 3,000. Of course, Admiral Tico is his daddy. We're gonna switch. I said, what? Just flip for 1 or 2 days. They really, really oversold daddy. Of course, dog was spot on. So we did that. And of course, one of the guys came and a couple of guys complained. One was the Time and Digest guy, George Slezak. And he said that, where's your option trade? I said, I abandoned trading options right now. But we drop in like this, you know how expensive the walls are? Do you think somebody wants to be a buyer here unless they're squeezing me hard enough on the walls? Are you out of your mind? He goes, oh, remember he's an S&P trader. I said, you're a futures trader. I'm both. Maybe I'm not trading as much futures as you have. I trade a lot of options. You can realize in this mode, we say that if the walls start exploding, we will not give you an option trade. I'm sorry. It's too dangerous because you're gonna pay a lot of profit on the way in. To who? To market maker. Because they're gonna open up the bid ask. Not something that most people don't talk about. And so you're gonna get in trouble. You're better off just go through cash or futures. Cash or futures, but not lower leverage on cash, bigger leverage on futures, but not options because the walls will get to you. Now, put options are special. If you get in the right side on the put side early on, not too late, then you get double whammy. I'm sorry. Yeah. Actually, I'll say it another way. It's a selling calls, not the put, but selling calls. Is that the right answer? Let me think about this. There's a parity equation there. Theoretically. Okay, let's keep it simple. If you buy puts early, so the walls weren't too high, there's a double whammy. X minus S in the Black-Scholes while it goes up, and walls are exploding. So they both add to your premium value. Remember, you're gonna get paid. You're gonna buy the premium. You're gonna get paid by the premium. Okay. I'm not suggesting you go do short calls. Those are naked calls, and it's not for everybody. Unless you have really, if you're doing it as a writing calls, like you have the stock, then you're not really shorting it in a way because you're getting battered on the long stock itself, So, but if you do the puts up there, you could. So, anyhow, and then a couple of customers said, "Yeah, I want to get into that." I said, "You understand the puts and the vol you have to pay?" But George was more like, "Why are you changing your position?" I said, "Because those are rules. I can change my position." Mark we have rules where you have to have with Time and Digest that shows your integrity, shows your transparency, you have timeliness, you have to be unambiguous. You can only change your position one time. That includes the weekend. It has to meet by certain time, and it has to be written unambiguously. So you cannot come back and say, "No, I was wrong there. You misread it." No. Very clear by a certain time, and you can do it only once per market opens. So if I make a call now, I can't change it until tomorrow night. I gotta go to a market open. So if you change it Friday afternoon, you can't change it Sunday afternoon. You see what I'm saying? You can change it Monday afternoon. You gotta go to one more opening of the market. So those are keeps everybody. But there's no rule saying you can't go long on Monday and short on Tuesday, and long on Wednesday. Now, and I normally don't do that for market timing because we don't get those moves. But when the market moves 3,000 points, the Dow does. It's washed out the other side. Okay, that's not really market timing. That's a violence that you see, an upheaval when the market is puking. Yeah. So, like what happened to me on a couple of accounts today. You get puked because you get pushed so hard, you just can't sit there and make it even worse. You stop and fight another day. You can't just go, I'm going to go down with this ship. That's stupid. That's not a way to do. Anyhow, so that was the issue back then. And, of course, I understood why. Let's see. He was George, interesting character. He actually ran a user group down here. I went there a couple of times, and then I made a call here. Dad, you need some hedge. He threw me out. He goes, what? I said, wait a second, like a year before that, I was one of his panel, one of the key speakers. Because he had seen my name constantly on Timer Digest. I was the Timer of the Year a couple of times. And several times, actually. And he said, look, I'll meet you, come on over, give a talk. And I said, fine. I copied everybody there. I didn't charge anything. But anyhow, when we were going up, so I was like a standard guy there. Went to seminars a few times. And just, almost free. Just it was changing ideas. It was like a user group. But mainly was financed by IBD. And the kick was these guys were getting some IBD data. You could share all that, the charts and all that. And nothing spectacular. It's just like a small little promo they were given. And but they're basically long because they're trading IBD. They're nifty. What's it called? FIFT. What is that? What it's called? I forget what it's called. You guys know that? I think if I go to Swang, is it FIFI? I think FIF1. No. Hold on. It's let me see. It's IBD. Let me go to symbol. Does anybody know the symbol for that? Let me see here. Can I go there? Look up. I believe it's ETF. Is it no auction index? No. IBD. Let me go there here. IBD. Let's see what we have. Okay. IBD. Why don't I see it? No, it doesn't begin with. No, contains. Sorry. Look up. Okay. No, it's a stack. It's an ETF for IBD. Anyhow, if you look at it, it runs up very fast, and when it comes down, it's horrible. Okay. So all I said was, let's see. I need to put Boeing up here. All I said was, hold on. Sorry. All I said there was, listen, these guys may need a hedge because now everybody's bullish. Okay? About this point period. I said, no, I'm sorry, this period. It was before this. I said, yeah, everybody is bullish. You need to have a hedge on. It basically excused me. He didn't throw me. I guess like he says, I think you're tired. Maybe you should go home. Didn't want to have that conversation. No way. Yes. FFTY? Maybe. Hold on. Yes, Dennis, I think you're right. It's something like that in there. Hold on. FFTY. Monthly. Yes. Yeah. That's it. Okay. Yeah. You see what's happening there? Yeah. These guys are getting their ass kicked. All I was saying was that, when it's running up is the best time to buy insurance. You can't buy insurance down here. Not when your next your neighbor's on fire. Nobody's going to sell you insurance. This is a backup thing. I'm going to cancel it. So it's a backup now because then we'll be locked out for you. So long story short, I said, fine, no problem. Then we had this. Okay. He invited me back. Barry, can you come in? I'm sorry. I was out of line. I said, whatever. I'll sit in the back anyway. I'm not. Listen, when I was in LA, I ran my user group. 400 people, and I ran it. Ask Nancy, she'll tell you. Ask CLMAC, their number over there. That was my group. It was very active. We did things. And we had speakers, this and that and that. Here's a small little group and small, you get to, I used to get I forget the name of the restaurant hotel by the airport. We had a good group, big group. Here, we're going to Perkins, a little back room of Perkins, for as we ordered a little dinner, and they give us a room and they put a projector up. So, anyhow, long story short, we dropped like this. Well, he asked me to come in, fine. He did not change his position. I rotated right. He didn't. He got his ass kicked. Okay? Then he goes long here and the market drops. So at this point, I sent his note to Jimmy Schmidt. I said, I don't know what's going on with this guy. We used to be friends. Look how he's treating me. He goes, Farry, he has been since early 2018, like for 2 years, he's been inverted. You went long, he was short. You went short, he went long. And guess who won? That's what I know. I see my results. And his numbers dramatically dropped for like a 5, 7, 8 years. Nothing wrong with him. He's a good guy. And he closed. He closed his, but actually, right about here, he closed his website. Because he kept it short. He didn't cover, did not go long. He kept on staying short. And here he closed his website and then market drops. So here, he's getting a note from somebody at my chart and saying, hey, Faye, can you explain this to me? I said, what up? Are you okay? And we're not heard from him. Close the user group, everything. And then Jim Schmidt tells me what's going on. So, guys, markets have up and down. You're going to make it. You're going to lose it. You're going to go sideways. At some point, you stop and say, I got to fight another day. I can't go there and go down with the ship. So, but that's what happened to George. Otherwise, George was awesome. I mean, before, he was like, on long term, he was like number 2 with me. I was 1, he was 2. But then this period on, he just got really, really killed here. And he just closed here and then gone. All I know is that he was, the moment he rotated up was the last signal we had from him, which was too late. So, but remember, I've done that too. Yeah, you don't know. This market is got its own rules. Now, let me go answer a couple of questions that are on the books right now. Thank you, Dennis. So Gary writes, at what level SIP do you stop using Eviar to fill Admiral Tico's water dish and switch to tap water? First of all, we don't have to worry about that because he's equally adept to be short. Why? He has a very high lifestyle. Okay, I mean, the other day he ordered, I ordered a burger for him last night, and he said, "No, Daddy, I'm gonna have a what is it? Filet." I said, "What?" And he puts his card on the table, and boom, that's end of that. So he's good. He's liquid. He knows what he's doing. We should be fine. Now, if you're asking me, we run out of funds for him to offer him Evian. Plus, he doesn't like Evian, as I said. He's more of a boss person. Yeah, not in a plastic, but in glass. That's 1. 2. Speaking of levels, well, let's see what we're looking at. 3 Sigma is saying here. I'm sorry. 3 Sigma here is saying 378. That's 2. That would be 360. So if I put 360 here, that's the retail. So that, yeah, I think we're going to take that out. I think I would say, okay, 3860. I would probably say, remember, I was pounding the table back here when the Putin went in. Remember when Putin went in at a 200 to 1 leverage position? 200 to 1, yeah. We only got 5 to 1. By the time we got there, why? We lost a little bit data. And also, this was a very, very panic situation down there on the day he attacked, which was 24th of February to Ukraine. Tico was right, spot on his oil trade. He said 130, Daddy, 130 on lead contract for WTI. About middle of January. When we had those satellite pictures of him positioning near the border, he says, Daddy, I think it's 130. We're trading about 75, 77 maybe on WTI. That's West Texas Intermediate crude, FOB, Cushing, Oklahoma. And guess what the top tick was? Well, that would be that would be that would be a April contract. You couldn't have you couldn't have the March because you're already February 24th. That top tick down there was 13050. From 75 to 130 was right. It was off by 50 cents. So I don't think you have to worry about whether he's going to have tapor or not. And I don't give him tapor. I've never given him. I took him out of a pound. He's a rescue dog. And the first day he was served what do you call it? Zero water. Actually, zero water is even better than all of these guys. Yeah. Take a look at it on Amazon. Yeah, but I just got my zero water. So he's been on that and instance. Now, if we can't find Ross out there at some restaurant, we give him Fiji. Okay. So and there's also zero water you can get portable. Yeah, but I don't make a scene. Pour it in there, wait for it drip, and then drip. He's okay, but be very careful. His health is good. He's got good doctors. They keep track of him. More importantly about your dogs is their teeth, and he's got fabulous handling on teeth. That's what they usually die from. Something goes wrong, they think we don't know. Every year he gets they did this. He gets a X-ray done while he's put to we can control sleep because his trauma moves a lot. So he's good. Now, what does he tell us what to do? I've been pounding a table since pretty much here, I would say, yeah, because April. In my writings, you can see that. Pretty much from this level, okay? That we should be waiting for about July 4th, okay? At a round number of about 3,500 to 3,700. I was wrong on time. I was wrong on the price. That's true. So we got close, but no cigar. It bounced back. Okay. I went long then. I covered about here. Went long. Long was good to here. I covered. Came back down a little bit of short. Got a little dicey. You could see my results. And then popped. Now, along the way, I had some drawdowns, of course. You can't trade with no drawdowns. Okay, yeah. As a matter of fact, I'm not good with drawdowns. Yeah. So it could go a little bit against you, you get unnerved. But long and short of it is, I think from these lows down there to yet I'm saying, and yet we haven't seen any capitulation. This is the closest thing we got to capitulation, which is the ratio. Okay, this ratio was let's see. This ratio. Oh, let me see if I can do it like this. No. Oh, okay, that ratio down there came to what? 538? No. Oh, no, that doesn't make sense. I'm going to go here. Okay. Went to 57. You see that? 57.45. So this is pretty high. I'm not getting anything near this right now. So that's not a bullish signal. No, because we gotta get that level or lower, and then have a lower number here, because that's inverted. So you want lower than this level. Okay, that would be our first plot point. So what was the low here? 36, 39. Okay, say 3,600. You want to take 3,600 out, get a volume data that we have a spike, but let's say 30 to 1, not 57 to 1. That would be one data point that's worth looking at. We're not there. Why? We still need capitulation. An ultimate capitulation, which we may get after 4th of October, would be where this thing goes nuts, like at 90. I've seen it. 90 to 1. So it was very rare. As a matter of fact, it happened. I think I was in LA. No, I was in Chicago. I just got into Chicago. It happened. And then what do you call it? Don Coyne, fairly decent market timers came in, and he says, "Barry, let's call the exchange together." I said, "Fine." What we tried to do was with a data collector now. The data was not. We had never seen data like that. So our assumption was that it's not right. Okay, so it was no, that was correct. You got to 90 to 1. This is only 57. So that's the key point I want to look at. And also, then I want to come back and see, am I at 4 sigma or not on the VIX? I haven't seen that. You've noticed how the pullbacks are when you get to 4 sigma, or better or higher. We haven't seen that yet either. This is wrong. I'm going to write a note to them to have it cleaned up for tomorrow. Of course, this I want to be like 15 or better, lower. And Momo, at least 13, at least 12 down there. Negative, we're close, but I don't think we're there because most likely we may bounce here. So at that point, I'd say the low is in. But remember, you can only say cautiously because only you can see in the rear view mirror. There's no guarantee it's in. Okay, nobody can give you that guarantee. So let me say that. All right. Hopefully that answers your question, Gary. Next question is from Anita. Could this market break? Of course it can. Yeah, okay. Historic monthly increments of 70 basis points is a lot compared to historic pace of the market. Yes, but remember we're much lower levels. And this was a huge surprise for everybody. Because part of it is because it's easy to be Monday morning quarterback. Okay, everybody can tell me on Monday morning what I did wrong last Friday. Okay, kudos to that, including here us going back and judging and say they should have known printing so much free money. What are we talking about? This is free money still. Why? Inflation adjusted. These are not. These are nominal. These are nominal rates. Nominal yield to maturities of the 5, 10, and 30. How about taking inflation out? So we're still printing free money. Not bad. So when you print so much, remember, March of 2020, the jobless claims were 20 million. March of 2020, jobless claims were 20 million. Okay, when you hit that, and you just throw the money at it on the 23rd, Jerry threw everything in the kitchen sink at it. That was a Monday. That we had said what? Spring equinox, which was a Persian New Year. Spring is here, renewal. That was a Friday. And our goal was 18,000. First of all, early on goal was take 21.8 out, which was this. Again, I'm talking, let's talk about Dow. It's easier. Let's see. This is the daily, yeah. We said, well, let me do it like this. Maybe I can get it this way. Okay. We said take, this is 21. All right, so sorry. Let me go to weekly. That's a little bit easier. Otherwise, I can't fit it in there. Okay. So there we go. That's the drop. Okay. We said take this out, which was at Christmas Eve 2018. Take 18,000 out. Those are the day Trump was elected. And then 14.5, 50% retracement. 3 different issues. Boom, boom, boom. Well, we only got 2 out of 3. But the date was spring equinox. Well, that Monday, the reason we went up, that Monday, he unleashed, and he said in his interview with Scott Pelley on 60 Minutes, he said, we did this and this and this. If you go back and listen to other people analyze that, they say, he just printed like crazy. But today we're paying for that. There's no ifs and buts. We are. So they should have known some of this would happen, especially when you're going to have what? Wage inflation, lack of parts, okay, lack of drivers. You have massive problems at the ports. It's called supply chain. We combine the two, the inflation is going to explode. As the inflation goes to explode, even your current demand on the rates are going to be risk-free. I'm sorry, they're going to be. I'm sorry, when they're going to be inflation adjusted negative. So we have negative rates here. These are real terms. Okay, so this will continue until that CPI drops, at least PPI drops even further. So we could have it for a while. Now, good thing is the market is the best. God like talk about it today too. The best market sentiment out there about the economy, not about the market. I'm sorry, the best economic sentiment, not market sentiment, is the market itself. The best economic sentiment is the market itself. It will sense that. When we reverse, then it's saying 3 months, 6 months from now, the data will stop getting worse. Jeff D. Graff argued that we may have seen that in PPI. Obviously, market reaction does not conform today, but remember, markets always overshoot. They become excessive. So we just have to see how that works in a rear view mirror. Markets will never tell you, because nobody knows. All of us have one vote or whatever in our pocket. That's our vote. Markets never tell you what the low is. You can see it in the rear view mirror. Did we see it today? I don't think so. Why? Well, the VIX is not too high. Signal level, relative to itself. Readings here are not low enough in the SP1, SP2, and the Momo. And volume doesn't show any capitulation. So, having said that, I think the bleeding will continue, but along the way it will be tug of war to confuse everybody. Listen, when they went up here, now we know, in retrospect, the rear view mirror, they were bringing longs in for a bull trap because they didn't show us this one. So, all right. That's my two shekels. 605. How did we open here? Let's take a look. This is overnight. Okay, we're down 8 and we're down 41. That's noise level. That's nothing. Look at percentage wise. Yeah, that's nothing. So we cannot positively say, excuse me, what it's going to do tomorrow. It's too early. Now, data could move it. Exogenous news could move it. Notice the news from Trump had nothing to do with it because that was in the morning, like 11-ish, 11:30-ish, when not the indictment, the actual fraud lawsuit. Civil court fraud lawsuit came in. I don't think it's dischargeable under bankruptcy either. Okay, that didn't react. Yeah, because I think it was priced in. So no, this was strictly Fed doing, and part of it I think I agree with Gun Gulch. And nothing new. It's not my idea. It's not even his idea. Because this has been talked about before and before. Well, that's intraday. Hold on. They should have done 1% from the very beginning. Remember how many times I said I'm on 1%? Well, that was in February. March, nobody listened to me. This is the price you pay. They pay this. And look at this move. The moment he was done, right about here. The moment he was done, he stopped talking about here. I remember this one. This one it stopped. That's what I said. This one it stopped. This part was when it stopped. I said, yeah. Get him off the soapbox, and we rallied. Yeah. Of course, once he was gone, the big guns came in, and boom. You see, not a lot of volume, but you could see. You could see that this bar was that right there. Here we go. That was about. It was consistent. They sold it. Anyhow, any other questions for me? I'm sorry, I'm a little bit tired. It is what it is. But I'd rather have it with you this session than try to do it tomorrow because then my mind isn't as clear about what happened today to bring that out to you. But yeah, some of those runs were incredible. I remember this run, this one. These 3 bars were incredible. Yeah. Problem is I didn't take enough out, so I got caught in a couple of accounts. So it's okay. Yeah. And then I had the machine issue. And coffee. I spilled coffee, which I let it go. I didn't even clean it. People know in the chat room I said that. I said, I can't get to it right now. I deal with it. I'll clean it. So what? This is, a couple. There was no electronics near it. It just hit the table, the desk. But but the computer was on another side of the desk. That got it too. I couldn't bring it back. It turned out that somehow it was reset. It reset itself. Yeah. I wasn't sure it was TradeStation or what do you call it? Microsoft. And so then I got into the login with TradeStation from another computer. That was fine. So I know it's not TradeStation. Then I started looking at the Microsoft, but I didn't have time. I did it after the close. I turned out to be, it was an update. That caused it. Anything else, guys? Next webinar will be next week, okay? We try this for you as often I can. And I'm glad I didn't cancel. I was tempted because I didn't know I'm going to have the machine to show you anything. I don't go do webinars on other machines. That's just no. Plus, there are 3 of them occupied. They're big for the user for the the seminar. I mean the webinar. Or chart room. So I just can't. And we have a small window. The market is flat between 5 and 6. But I can't kick people out and bring it back. It's just too much. So here we are. What's the question? Thank you, Dennis. Appreciate it. All right, guys. See you soon. All the best. As always, this is being recorded. The moment the posting is complete, it gets posted here under our videos. Okay. And if you're a member, you can subscribe. If you're a member, you have a Gmail account, it will be easy. The moment we post it, you get a copy. Okay. But give me an hour. Usually takes about an hour. Okay. So let me close this, get that processing started, and then we can have it posted for everybody. Good night. See you next Wednesday. Thanks.